Welcome back to Switz. So the biggest worry for Wall Street right now is what the S&P 500 index is doing in relation to its 200-day moving average. This could be a charting crisis that only one man can interpret, or maybe there's a few others out there. But our man, of course, and our man at the moment is Lance Lane. He joins us in the studio. How are you, mate?
Hello, Peter.
Now, I should say to people, on Saturday we played tennis, we had a nice lunch, and it wasn't until 6 o'clock that we actually started looking at the charts, and when you saw them, you didn't like what you saw.
No. Well, you see, I hadn't looked at the time until I thought I'll turn the charts off a little bit,
yeah.
And Wall Street closed a little bit worse than what I thought.
OK. We always go back to see what you said last time, and just about every time we do this, you're right. So let's just see what you said last time you were on the show.
Sure.
OK.
So we have the 200-day moving average, which is broken. So for the first time in some time, you can see there, This is what it looks like when the 200-day moving average gets broken.
And Lance, was that around the Ukraine-Russian thing?
Absolutely. This is the geopolitical risk impacting the German market. I think what we see there, can you see how just so strangely how technicals work? See how it bounced off support? It's done exactly what I thought it should do.
Yeah, okay.
And I think what we're in for is sideways action, Peter.
OK, Lance. So that's what you said. What actually happened for those people who can't recall?
Well, you know, for a little while we did get sideways action. And on that chart, what happened
And by
was...
what date was it, Lance, for people?
26th of August.
OK. In fact, the market actually rose into early September. Then it had a bit of trouble. OK,
right.
So you were right for a while.
That's right. I was right for a while, but I think the confluence of the geopolitical events,
Ukraine and stuff like that,
really hit the market this time around. And, you know, I thought the first chart that we'd bring up, I thought, well, you know, I should have kept on the theme of what happens when the 200-day moving average gets crossed, because in that chart that was shown there just then from last time, because it was crossed, it really was a prelude to what was going to happen, I think, in the weeks to follow.
OK, so do you want to go to your first chart now? And what chart is that?
That's the DAX.
So go back to the German DAX.
Yep.
OK, let's just have a look at that. As we're waiting for it to come up, tell us what we're going to see.
Well, what we're going to see...
There it is.
Here we go. OK, so A marks when I was last on the show on the 26th of August.
Yep.
At that time, you could see that it's sitting right on the 200-day moving average. And I said that it would go sideways. And, well, you know, it did for a little while. But guess what? I mean, I think the geopolitical tensions and all the bad news that came out...
That's Putin, Ukraine, all that stuff.
All that stuff. You know, Ebola...
And also the ECB not actually coming up with a really strong initiative as well. Yeah.
I think it all became too much for the markets. And as you can see on the far right, we've had a big fall off. And what we've got there is, you know, the negative part of this is that the yellow line that's sweeping from below, the 200-day moving average, that went basically unchallenged, where the market went up for 24 months.
70%, huge.
70% huge. That really should have been a warning sign that when it crossed the moving average, it was going to have a few more problems. Now,
This is the overdue correction they needed.
That's the overdue correction they needed. And what we can see here, we're actually at the very low at the moment, 8812 at the far right. And that represents actually a fall of, you know, quite a fair bit. It's 12.3% in 4 months from the top there. And what it represents is that I think we're going to bounce now back to the 200-day moving average, because last night, the way it traded, it actually opened the lowest that it could, and then it closed on its highs.
Yeah, and so there are a lot of people in Europe saying this is a buying opportunity, just like we probably saw in Australia today.
Right.
There's buying opportunity people out there. And I'll tell you what, Lance, if Tony Abbott can scare Putin to behave himself, wouldn't that market rebound?
Oh, absolutely.
Go, Tony.
And you know what? I think that we really have got a nice rebound coming back to that 200-day moving average, which is not an insignificant bounce of about 8.4% that I could see.
OK, right. Let's go to your next chart.
So the next chart is the it's going to be the US S&P 500.
And this is the one that a lot of people care about, because last night, when you and I talked on the weekend, it was sort of sitting on, it was a small breach, wasn't there, of the S&P 500.
Correct.
But overnight, there was a big drop. What does that drop tell you?
Well, obviously, it went through the 200-day moving average. It was hanging in there all day, but in the last hour or so, it capitulated.
Yeah.
And I think, again, you can see there where there's a little S. We're really close to support again, and if not there, then about 3% lower at 1816, there's another support there. Now, what this currently represents, and A represents when I came on the August show. I thought it would retrace back down closer to the lower part of the channel and probably stay within the channel. But, you know, as I said earlier, I think the confluence of all the macro events coming together was too much. It was the long overdue correction. I don't think we're necessarily moving into a whole new phase of a bear market. No. I think what we've got is a situation where we'll bounce off one of those S's, we'll go back up towards the 200-day moving average, and you know that'll hopefully bring me to the next time I'm on the show.
Yeah, and the interesting thing is, Lance, because at the end of the day, this is a technical analysis, but real-world things can really make it difficult. Like, for example, the Ukraine-Russian thing. A chartist can't expect that. You can actually try and work it into your analysis, but the reality is, until the market gets spooked by it, it's not sort of showing in the market.
Well, what's happened was, you know, there were some signs that something might happen, but of course, what threw me off in the timing of this was that we had an improvement that was happening in China last time I came on the show, and indeed that prediction proved itself to be very correct.
And the Shanghai market has done pretty well over that time.
And you know what? All the bad news had actually been in the market. It's not as though a bomb was dropped and we didn't expect this. It's just that because it hung in the market, the bad news.
When you add all those together and throw in Ebola, and you also throw in the overdue correction, as you said, 21 months there, up 49%. The German market was even more. It was ready for a correction.
Correct.
Let's go.
Correct.
Well, so you're thinking that there probably will be a bounce out of this. Not sure how low it goes, but earnings season is going to be really important, I guess, to what support level is going to be relevant.
I don't think we're going to fall a heck of a lot more. I think we're down about 7.2% at the moment in 3 weeks. It's probably due for a bounce, just like what happened in the German market. It bounced back up, and we'll see what happens then.
Okay, let's go to the next one.
This is our market, the ASX, and really
they all look alike, really, don't they?
Very similar. Yeah. You know, see the S there on the bottom? This is where the bottom side of support would be the worst, I think, a bad case scenario. I think we had a really...
What number is that, Lance? Can you tell me?
Yes, we can. That's 5013, which is about another 3.9% lower.
Okay,
Now, today, just like what we had in Germany, we had a really nice day, actually, in that we actually closed near our highs. And what we've got is a situation like what I just said in the US. I think we're going to start to see a bounce back up to that 200-day moving average. Probably go back into that zone where we're slightly above the 200-day moving average. And, you know, there's been a very large fall off, you know, from when I came on last, where it says A. That was the August 26 show. And, you know, there was no signs at that time that we were going to have the immediacy of the fall off as we did.
Yeah, but to me, looking at that line, just like in Germany and the USA, it says, buying opportunity, baby, buying opportunity.
I agree.
Good on you, Lance. Next one.
So this chart is the Shanghai index. And really what we can see there was in August, where that's marked is where I came onto the show. At that time, I said that what we would do is probably retrace a little lower towards the R. We nearly got there, and I said we would move towards the T. The T at that time is 2,333. As you can see, we went virtually straight up there in that time frame. So the market did as I expected, and in fact it went through there. And now we're sitting at 2,358.
Now, Lance, we can see before that kick up, China's basically went sideways on a slightly downward trend. When you came on the show, you just come back from China. You liked a lot of the anecdotal or fundamental evidence you saw, and you also did tip. I'm surprised you didn't use this in your clip, because this actually shows you to be a genius. But this is actually, is China's stock market a good feeler of what's going on in the economy, or can they get it terribly wrong at times?
No, I think what the stock market is a good feeler for what they have got installed in their economy. I think that we're always, these indices are always a little bit ahead, I feel, of some of the news that might come, because people are putting on their bets, as it were, and getting themselves positioned.
I guess there's a lot of inside information in the Chinese economy and
You
market.
know what, Peter? I think there's good information flowing everywhere.
That's a good way of putting it, Lance.
But you know what? I think what the last time that I came on the show, we've been waiting for China to turn around.
Yes.
You know, we'd been waiting for quite some time.
Yep.
I didn't think it'd go to those B levels, the bad levels, and they didn't.
No.
They held at that bottom channel. So that market, having turned around, I think gives me great confidence that what we're seeing now in the Western markets, where I think we spoke of this before, the Western markets can come off whilst the other markets pick up. And I think this is the positivity that I feel is in store for us. And I'm not concerned with the falls that we're having now as being ushering in a whole new era of bad news.
Great stuff. We'll end it on that very good ending. Thanks, Lance.
Thank you, Peter.
Great to see you. That's the show for tonight. If you want to check out my thoughts each morning on the close of Wall Street, go to switzer.com.au. Thanks for joining us. I'll see you tomorrow night.